Oil, copper, and gold prices reaching their highest levels in months. Joining us right now is Francisco Blanch, BofA Securities head of global commodity and derivatives research. And Francisco, why don't we start with oil prices? They're at 4.5-month highs right now. A lot of this is because of attacks in Russia. Can you explain where things stand and where you think they're headed?
Hey, Betty, great to see you. Look, I think there is, as you pointed out, there's been a lot of attacks on Russian refinery infrastructure in particular. And remember, we're now going into the driving season. So over the course of the next few months, we're going to see a big buildup in inventories of gasoline, of diesel, and of course, to get ready for the season. So of course, if those refineries are damaged, that's going to pressure the entire complex up, which is exactly what we're seeing today.
You think prices will continue to climb from here?
Well, I think there's a risk that certainly both gasoline and diesel prices chase each other up into the summer because we start to run tight on refining capacity. We've had, since we came out of COVID, we've had 3 bumper travel seasons. 21 was a little milder, but then 22 was great, 23 was phenomenal. And I still think 2024 is going to be very, very strong for tourism, whether it is road transportation or jet fuel demand, so air transportation. So we still see a strong summer season ahead.
Copper prices have been climbing, and a lot of people will say that's because there are expectations that global manufacturing is going to continue to do well and improve from here. What do you read into it?
We agree. We think there's a restocking cycle. The one thing we need to get copper into a much firmer footing from here, it's interest rates to go down. Now, the market's expecting 3 cuts. We are at Bank of America expecting 3 interest rate cuts starting in June. If that plays out, copper will have a lot of upside pressure because inventories of both finished goods but also raw materials are actually quite low. Remember that normally when we go into the end of a business cycle, companies draw down their inventories on high interest rates only to see sales crush. But that's not what we expect. We expect sales to firm up as rates come down. So we think copper will do well, and we think green energy transition demand for copper will be very strong going forward.
What if that's not the scenario that plays out? We had Roger Ferguson on earlier this morning. He's the former vice chair of the Federal Reserve, and he says just based on what he's seen with the CPI and PPI numbers recently, that he is now only expecting 2 rate cuts. He wouldn't even say that he thinks they'll happen starting in July. He thinks the second half of the year is a better bet for that. If that's the case, do you think copper prices come down?
I think copper can come down a little bit here if rates do not start to come off in earnest. But of course, copper would suffer the most if we had a recession. So I think there is a very fine balance here. If you look at PMIs globally, industrial activity, industrial production metrics, they're all bottoming out. And they're bottoming out on the expectation that interest rates come down. And there's continued demand for all these goods that has been tempered through the last couple of years where we had rates going from 0 to 5.5%. So yes, if the rate cutting cycle does not really start, I think copper will take a little bit of a hit here. But again, inventories are low and the downside is small. So we're seeing very, very strong bid on copper concentrates actually right now. So the raw material that makes us be refined copper.
Gold prices at all-time highs. That's happening with that same backdrop. Concerns, I guess, about inflation.
There is some of that for sure, Betty. But I think one big thing that's driving gold prices up is geopolitical risk. We've seen the financial system effectively coming under a lot of pressure at the central bank level. It's one of our big things for the year. Central banks don't trust central banks since the Europeans and the Americans decided to freeze central bank assets from Russia. So we've seen huge central bank buying for the last couple of years across the board. Even traditional U.S. European allies are buying gold because they're worried about pressures from China in the years ahead or from Russia. So we're seeing a widespread buying across the central bank community, but also I think people are worried about geopolitical risk. Remember, we still have a hot war in Ukraine, which I guess after the news on the Russian election, could still go on for a while. So I think, and then of course there's the U.S. election in November. So I think that geopolitical risk is also building up into the gold price.
We got to run. We're late for the commercial break, but thank you very much.